Have you ever wondered if that $1 bill in your pocket is really worth a dollar? You might be surprised by the
Today,
answer.
we're diving deep into the true value of money. Trust me, by the end of this video, your understanding of what makes a dollar worth a dollar will completely change. Stay tuned. Welcome back to Prime Wave. In today's video, we're going to explore the fascinating and complex world of money. Is $1 really worth $1? We'll uncover the history of money, what influences its value, and how this knowledge can impact your everyday life. Let's kick things off with a quick history lesson to understand how our modern concept of money came to be. Before we had money, people relied on the barter system. Imagine trading a cow for apples. Not very efficient, right? As societies evolved, they needed a more convenient way to trade goods and services. This led to the creation of currency. Ancient civilizations like Mesopotamia used grains and metal objects as money. Over time, coins and paper money emerged, revolutionizing trade and making transactions much simpler. By the Middle Ages, we see the rise of banks and promissory notes, the precursors to modern paper money. The development of standardized currency helped facilitate trade on a larger scale. Today, most currencies are fiat money, meaning their value isn't backed by a physical commodity like gold. Instead, their value is derived from the trust and confidence people have in the government that issues them. So, what really determines the value of a dollar? Let's dive deeper. The value of money, like any commodity, is influenced by supply and demand. If there are too many dollars in circulation, their value drops. If there's a scarcity, the value increases. It's a basic economic we all know. Inflation and deflation are also key factors. Inflation erodes the purchasing power of your dollar over time, while deflation increases it. Central banks, like the Federal Reserve, manipulate interest rates to control inflation and stabilize the economy. Higher interest rates can attract foreign investment, boosting the dollar's value, while lower rates can have the opposite effect. Government debt also plays a role. High levels of debt can lead to higher inflation, reducing the value of the dollar. Conversely, a strong fiscal policy can bolster confidence in the currency. Now, let's put these concepts into perspective with some real-world examples. Historically, the US dollar was backed by gold. This meant you could theoretically exchange your dollars for a fixed amount of gold. However, in 1971, the gold standard was abandoned, changing our perception of money's value. For an extreme example of currency devaluation, look at Zimbabwe in the late 2000s. The government printed so much money that it led to hyperinflation, rendering their currency almost worthless. On the flip side, consider the Swiss franc, known for its stability. Switzerland's low inflation rate and strong fiscal policies make the franc a safe haven currency during economic uncertainties. These examples show how external factors and government policies can drastically affect a currency's value. But it's not just about numbers, it's also about perception. Let's explore the psychology of money. A dollar in your hand feels tangible and valuable, but in the bank, it's just a number on a screen. Behavioral economic studies show that our perception of money influences our spending and saving habits. For instance, people tend to spend more when using credit cards than cash. Simply seeing a credit card logo can make you spend more. Marketers use these psychological tricks to influence your spending habits. Being aware of these tricks is the first step towards taking control of your financial behavior. Consider mental accounting. People often treat money differently depending on its source or intended use. For example, a tax or fund might be seen as extra money and spent more casually than regular income. Emotions also play a significant role. The fear of loss can make you hold on to underperforming investments, while the thrill of potential gain can lead to risky financial behavior. Recognizing these emotional triggers can help you manage your money more rationally. Now, let's broaden our perspective and look at the dollar on a global scale. A dollar's value varies across the world due to exchange rates. Factors like economic stability, interest rates, and geopolitical events all play a role in determining these rates. Think about this. Your dollar can buy a lot more in some countries than in others. This isn't just about vacationing cheaply, it reflects deeper economic inequalities. Understanding these global dynamics can help you make more informed financial decisions, whether you're investing, traveling, or planning your future. Purchasing power parity compares the cost of a basket of goods in different countries to determine the relative value of currencies. For instance, a dollar might buy more food in India than in the United States. This metric helps economists compare living standards and understand the real value of money across different economies. Exchange rates can fluctuate dramatically based on political events, economic data, and even natural disasters. For example, if a country experiences a sudden political problems, its currency might drop significantly in value, affecting global markets and your purchasing power abroad. Additionally, remittances, or money sent back home by immigrants, play a crucial role in many developing economies. A stronger dollar means more purchasing power for families receiving these funds, impacting their quality of life and the local economy. Let's go further and take a moment to talk about digital and cryptocurrencies. Unlike traditional fiat money, cryptocurrencies, like Bitcoin, are decentralized and not issued by any government. Their value is determined by market demand and supply, and they operate on blockchain technology, which ensures transparency and security. Bitcoin, for example, has seen extreme fluctuations in value. Its price is influenced by factors such as regulatory news, technological advancements, and market speculation. Understanding cryptocurrencies can offer insights into the future of money and its evolving value. Moreover, digital currencies issued by central banks, known as central bank digital currencies, are being explored by many countries. These could potentially revolutionize how we perceive and use money in the future. Furthermore, the advent of digital payment platforms like PayPal, Venmo, and China's Alipay has transformed the way we handle money. These platforms not only facilitate transactions, but also impact the perceived value of money by making it more fluid and accessible. Let's delve deeper into inflation and deflation. Inflation is the rate at which the general level of prices for goods and services rises, eroding purchasing power. It's like a hidden tax on your money. For example, if the inflation rate is 2%, your dollar will buy 2% less than it did a year ago. Conversely, deflation is the decrease in the general price level of goods and services. While this might sound good, it can lead to reduced consumer spending and economic stagnation. When prices fall, people tend to hold on to their money, expecting prices to drop further, which can hurt economic growth. Central banks aim to maintain a balance, targeting a moderate level of inflation to encourage spending and investment without eroding too much purchasing power. Understanding these hidden forces can help you make better financial decisions, like when to invest in assets that hedge against inflation, such as real estate or stocks. So, now going back to our original question, is $1 really worth $1? The answer is both yes and no. Its value is fluid, influenced by a myriad of factors from government policies to global markets and even our psychological perception. Understanding these factors can empower you to make smarter financial decisions. If you found this video helpful, give it a thumbs up and share it with your friends. Don't forget to subscribe and hit the bell icon for more deep dives into interesting topics. Comment below with your thoughts on the value of money. How do you now perceive the worth of $1? See you in the next video.